It's Wednesday, the 1st of March 2023. Welcome to the Fast 5 by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 big stories in 5 minutes. Let's jump straight into it. Story number 1, the Albanese government will tax superannuation balances over $3 million at 30%. That's up from 15% in a move that it says will generate revenue of $2 billion each year.
Yes, around 80,000 people are expected to be affected by the change. It follows a speech from Treasurer Jim Chalmers last week that said he wants to rethink how super is targeted in Australia. Now, Chalmers said that balances over $3 million went beyond what's necessary to fund a comfortable retirement. The new rules will come into force in a couple of years' time. There won't be any forced sell-off of assets. It's just if you hold more than $3 million in super, you'll be taxed more. A lot of money in this. Super tax breaks cost the budget $48.2 billion a year. This is just a touch of that. Of those tax breaks, 55% of the benefit goes to the top 20% of income earners. Chalmers said pulling back some of this tax leakage is necessary for budget repair, particularly given higher expenditure in areas such as health, the National Disability Insurance Scheme, aged care and defence. Now, given the government before the last election said it wouldn't change super, this is likely to create a divide in politics. It enables the opposition to say the government hasn't stuck to its promises and provides a difference between the two. But I'm sure Chalmers and his boss, Anthony Albanese, decided that they're unlikely to suffer too much political damage cracking down on people with so much money in super. The question, which I'm sure the government's opponents will ask, is whether this is just the beginning. Super in Australia is worth $3.4 trillion. That's a very tempting honeypot.
Yeah, it's a big story. We'll be hearing plenty about this one, Sean. Story number 2, retail sales surged by nearly 2% last month, which of course sounds great. But economists say that if you look over 3 months, it is clear that the economy is slowing.
That's because retail trade fell 4% in December. It rose 1.7% in November. If you look through all that, over the past couple of months, it's been flat. Now, in January, food spending was up, particularly eating out, and there was a jump in department store and household goods spending. But the consensus among economists is that higher interest rates and mortgage repayments and rising unemployment, albeit from a low base, will drag on spending in coming months. Of course, the big story today will be the economic growth figures for the December quarter. Looks like that number will come in somewhere between 2.5% and 3%. That isn't a bad result.
Sean, on to story number 3, and ASIC, the corporate regulator, has accused retail super giant Mercer of misleading members about the sustainability of its investments.
Or of greenwashing, which is a term we're all going to hear much more of. The Australian Securities and Investments Commission alleges Mercer Superannuation misled members of its Sustainable Plus fund by claiming it excluded companies involved in carbon-intensive fossil fuels, but then invested in companies including AGL Energy, BHP, Glencore and Whitehaven Coal. It allegedly also told members it excluded alcohol producers and gambling outfits from the fund, but then invested in 34 companies across the two sectors. Companies like Crown Resorts, Tabcorp, Budweiser, Carlsberg and Heineken. Now, we haven't heard Mercer's side of the story yet, of course, but it is the first time ASIC has taken a company to court alleging greenwashing. Given that whole area of sustainable investing is the fastest growing area in funds management, everyone will be watching this case. In fact, it will become a test case very, very closely.
Sean, story number 4, Bunnings is shifting into pet care. Now, this is its first big launch of a new range of products in nearly 20 years. That's a bit surprising to me.
Yeah, it is. Wesfarmers-owned hardware giant Bunnings will launch a specialty pet care department offering items ranging from food to toys and bowls for cats, dogs, birds, etc. The department will launch next month and include 1,000 new items in a major expansion to its current offering. The specialty pet sector, Michael, is worth around $10 billion and it's growing fast. Bunnings said it was a natural extension, even citing the fact that many customers take their pets with them when going to Bunnings. There you go. Last time Bunnings went into a big new range was 20 years ago when it went into kitchens.
Sean, finally, story number 5. It seems the world is normal once again. Elon Musk has regained his spot as the world's richest person after briefly losing the title to Bernard Arnault, the French owner of luxury brand LVMH.
Yes, Musk, of course, owns a big chunk of Tesla shares, and the electric vehicle manufacturer's share price has doubled doubled since January 6 as investors get more comfortable buying into risky assets. According to Bloomberg's Billionaires Index, Musk is now worth $187.1 billion US dollars, ahead of Arnault's $185.3 billion.
There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 1st of March, 2023. Remember to hit follow on the podcast. If 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. And of course, it is Wednesday, so there's a new episode of How Do They Afford That, which is our podcast on making your money work a little bit harder for you. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.